Hello, everyone, and welcome to the Gibraltar Investment Group Stock Market Weekly Wrap Up. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Gibraltar, we use time-tested methods and indicators that helps us to navigate these markets with certainty, calmness, and confidence. This is your report for November 17th, 2024. Investors fade the Trump bump. The Trump bump fades while most of the different indexes recorded new highs on Monday. Those highs were erased and sent the NASDAQ on a 4-day losing streak. Interest rates ticked higher, briefly crossing above the 4.5% on Friday before settling at 4.4%. The increase in rates led to a surging U.S. dollar hitting a multi-year high, weighing on commodities and emerging markets. Gold, copper, and crude oil and futures all finished lower for the period. The sell-off in equities was broad-based, with the major averages closing near the lows of the week on Friday as post-election euphoria comes back to earth, with the major averages down for a third week out of the last four. Now, for the period, the Dow Jones Industrial Average lost 544 points and settled at 43,445. The S&P 500 fell 125 points and closed at 5,871. The NASDAQ dropped 607 points, finishing at 18,680, while the small cap Russell 2000 tumbled 99 points and settled at 2,304. The VIX, aka the fear gauge, jumped $1.83, but was down 12% for the week and closed at 16.14. And as we reiterate each and every time we distribute this broadcast, says that as long as the VIX is below that threshold of 20, the market tends to grind higher. That is what we've been seeing over the last month or so, with the last 3 weeks showing weakness. Crude oil prices down and closed at $67 a barrel. Gold prices lost $4.70 and finished at $2,568.40 an ounce. Bitcoin closed the session at 91,300, a new closing high. And we're going to be looking at our Bitcoin play that will help us to profit from this move upward. Now, the market outlook. The technical condition of the market deteriorated this week as the major averages pulled back despite new highs. The Dow Jones Industrial, S&P 500, and the NASDAQ have finished lower in in 3 of the last 4 weeks. Now, with that introduction, let's get right into these charts. And as you can see, we're going to be looking at our 4 grid. We're going to be looking at the S&P 500, the Dow Jones Industrial Average, the NASDAQ Composite, and also the Russell 2000. So as you can see, each one of our indices are still in a green background, despite the last 2 or 3 week drop. We are still long-term bullish. So I'm going to go ahead and maximize the S&P 500 so we can see exactly what we're talking about here. As you can see, we've been handed a green background since April 2023. So we're basically in a 2-year bull market here. If you've been with us for a while, you know that if the prices are above the rising moving average, here is a 10-week moving average, the prices are above. And then also our long-term moving average is the 40 week moving average, and it is also rising. We have our supporting indicator, the MACD, also in the positive. So we've been up, 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 then we came down for 2 or 3 weeks. We went up, 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 we came down for a week. We went up, 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 we came down for 2 or 3 weeks. Then we went crazy euphoric after the election bump, Trump bump. But this week we have retreated, but we are still above a rising moving average. So that makes us what? Still bullish. These are buying opportunities at this particular time. So now we're going to move to the Dow Jones Industrial Average. You're going to see a similar pattern. We have been in the green for over a year, since 11/6/2023. And as you can see, we move up, up, up. Then we come down for a couple of weeks. We go up, up, up. We come down for a week or so. Then we move up, up, up. We come down for a week or two. And as you can see, we really went crazy on an upside spike after the election, but now that has cooled off. But we did hit a new high for the Dow. So right now, again, this is a buying opportunity for some of those high quality stocks that are being discounted during this brief downturn period. If it continues and we break through our moving averages, we will know that it is time to move into cash. But overall, we've stayed invested for the last year, and for the most part, we have really profited well. We can see that our supporting indicator, the MACD, is still in positive territory. So that is the Dow Jones Industrial Average. Now we're going to move on to the NASDAQ Composite, the tech-heavy NASDAQ Composite. We moved into bull territory with a green background after that downturn way back in March of 2023. But ever since the signal that we received when our background turned green on April of 2023, we have had a rocky road. However, the background stayed green, so we stayed invested, and we're going to look at what we're invested in. Even though we had this high here back in July of this year, and we came down for 1, 2, 3 weeks, 4 weeks, bounced back, came back for another 3 weeks, but ever since then we have been up, 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 and like I mentioned in the introduction, we hit a new high, but last week we retreated, and now we are in a what you would call a short-term pullback. And as many times I've reiterated or stated that when we have a short-term pullback in an uptrend, it usually leads to a bounce off of a moving average, where we are right here on our rising moving average, the 10-week moving average, and the 40-week moving average is still rising, and there is lots of separation in between them, meaning that this momentum is expected to continue for the next 3 to 6 months if we don't breach these moving averages. Now, moving on now to the Russell 2000 is a little bit more volatile. Okay. However, we have continued to stay above this rising moving average. That is our principle. As long as the prices remain above a rising moving average, we do not panic, and we just stay the course and continue to watch our profits increase week by week. Even though we shaved off a little bit of a profit right here last week, we don't panic. Our supporting indicator, the MACD, says we're still in positive territory, so we hang in there. So what is our takeaway from all this? With these 4 major indices still having a green background and the prices being above a rising moving average, this is our long-term trajectory. We are still in the bull market, so we hang in there. So now let's see what's working for us. Let's move to our chart of the weekly charts of our I said we're going to look at Bitcoin, because Bitcoin is really taking off, and this is our play for Bitcoin. As you can see, back in November the 6th, which is only about 10 days ago. November the 6th. You can see here where Bitcoin BTF is taking off, and it hit a high of 2239. Now it's leveling off a little bit. This is a daily chart. we're going to go and take a look at the weekly chart. You can see that it is just starting to break out with relative strength. You like to see that. And this particular ETF or exchange traded fund that we use to easily invest in Bitcoin gives us a 10.5% dividend. So what are we invested in? We are invested in, of course, ABR, which has taken off a little bit, leveling off right now. But this is a $15 stock that pays us a 11% dividend. We, of course, still invested in tech. Don't get twisted, because tech is taking a retreat right now, a shallow pullback, as we call it. And but the world cannot survive without tech. So what does our tech play? Is a QYLD, right? And as you can see, prices above rising moving average. We have support with what we call the SAR, and also our supporting technical indicator, the MACD, and the Fisher transform, and also the MACD. Not particularly thrilled with the relative strength that we see right now, but it keeps grinding higher, and we are satisfied with that. What else do we have? We're going to have AI. We got to have AI, because AI is up and coming. So we're going to use AIO. Bam. AIO, as you can see, is a similar pattern. The price is above rising moving average, and we have the support of our stop and reverse, which is in a positive posture. We have MACD in a positive posture. We have Fisher transform in a positive posture, and I like the relative strength. Even though it's falling a little bit this week, it is still in that positive range. So we stick with AIO, and it pays us a 8% dividend. What else do we have? Since the strong sector at this particular time is the XLF, or the financial sector, and the XLC, the communication sector, our communication play is DALN. Look out now, the DALN is on the run, man, on the run. And we have positive indication for price above a rising moving average. We have our SAR, stop and reverse, in a positive configuration. We have the Fisher transformer, which is our weekly vertical crossover indicator. When it is positive, the prices tend to move positive. We have our MACD in positive, and we have the relative strength in the positive territory, even though it's starting to show some decline. So that's where we are with what we have. Now, we're going to look at what is on our watch list, and we have a few more minutes here. Main thing we have on our watch list is LFT. It's starting to show some declining right now, but LFT shows a 12% dividend. What else do we have on our watch list? NHTC. NHTC. And as you can see, it's starting to show some signs of life. However, it is not ready for us to invest in. Even though it pays a 14% dividend, we're not going to invest it right now, because we have now the opposite of what we like to see. We got prices below a falling moving average. So we don't want to invest in that type of configuration. What do we have next on the watch list? Is PTMN. PTMN. And it is in a negative configuration. And the next on our watch list, when it begins to show some signs of life, is going to be CHKR. This is an energy stock, which is now coming out of the doldrums. This is a 50-cent stock. I don't usually share this with everybody for free. 50-cent stock. 50-cent stock that pays a 30% dividend. Now we're going to look at precious metals. We're going to look at gold, GLD. Starting to show some decline right now after a very fast rise. We're going to look at silver, SLV, which is also showing some decline because of the strong dollar right now. So with that, I'm going to close this out, And I'm going to pray that every day and every way everybody gets better and better every day and every way we grow more prosperous.